Named after Pallas Athena, the Greek goddess of wisdom, palladium is one of the rarest metals on Earth. It's so rare, in fact, that it's 15 times more scarce than platinum.
Palladium is from the same group of metals as platinum, but it has the flexibility and pliability of gold. It's also one of the few precious metals whose demand is driven by industrial use and not jewelry.
Palladium supply is geographically constrained, with 72% of mine production evenly distributed between South Africa and Russia. The remaining mine production comes from Canada, Zimbabwe, and the US.
This geographic concentration of mine production leaves palladium subject to supply disruptions because of economic and geopolitical events. Also, it's forecast that there will be a deep shortfall in palladium, somewhere near 1 million ounces per year, over the next several years, due to continued rising demand for the metal, particularly from China.
The majority of palladium's demand, 71%, is driven by use in catalytic converters for automobiles, which is used for pollution abatement. In the coming years, one of the key areas of demand growth is likely to be China's ongoing adoption of more stringent emissions regulations.
Additionally, China's growing population is expected to buy more cars as the country's economic engine continues to accelerate, which may put palladium in an attractive position. The remainder of palladium's demand comes from industrial and technological applications and jewelry.
Palladium is a risk management tool, since it's a diversifier of equity exposure and equity risk. It's highly tied to the economic cycle, has supportive fundamentals, and a tight market structure gives palladium upside potential as an investment.
Another good reason to consider portfolio exposure to palladium is that the market has been in a supply deficit for the past 4 years.